Hello everybody, this is Brandon from Galaxy Stock Market. Today is July 18th, 2026. It's Saturday about 9:34 a.m. as I bring you this very important market look ahead video. And the title is Trading Sideways. What else is new, right? Well, there is a new twist because we got to trade the market that we see, not the one we want. And we've been very patient over the last couple of weeks as we went through the summer doldrums where the volume just declined to basically nothing. And in those environments, you have to keep your trading sizes small or just stay in cash. Okay. And we have pickup in volume. Believe it or not, that's happening right on time and right on schedule. We also have a slight twist. You know that we've been cautiously bullish on this market, but this week we may have a continuation based on our gamma analysis of a sell-off continuing into Friday. Now, it doesn't mean that Monday through Wednesday, Thursday, the markets aren't going to chop up and down. That's what it's been doing. We're trading in a range. We're trading sideways, folks. We're in a range-bound market. However, we do anticipate that the markets are signaling further downside and sell-off heading into this coming Friday, okay, which is the 24th of July. So without further ado, I want to present to you my technical analysis, go over some newsworthy items. A lot happened over the week, okay, especially with regarding the election and, Trump basically declassifying what happened in 2020. We'll go over that in a little bit. I'm trying not to make it political, but you do have to call a spade when you see a spade, right? So here's the disclaimer. Pause it, read it. If you agree, please move forward. And of course, thank you so much for following me at x.com/GalaxyStockMarket. And also following me on YouTube. Like us, share, and comment. And of course, more importantly, subscribe there for information if you're not part of our community. All right, so last week I made this slide and we talked about it because we were talking about on Monday, the gamma exposure was very positive, and sure enough, from Monday through Thursday, things were looking pretty decent. But our gamma exposure on 7/17 Friday, and this has been something that our algorithm has been picking up, is that on 7/17 it told a different story. Okay, different story from bullishness. Remember, we are in a range-bound market, so you have to take that into the context. Bullish and bearish is a chopping sideways range. However, our gamma exposure on 7/17 Friday, I said, hey, it tells a different story. And what that meant was that the story that it told was that here's the blue dotted line at that time, which is, this is SPX that we're looking at, and this is gamma exposure. As you can tell, this was on July 10th when we did this analysis. And I said, hey, look, you know what? Next week, looking ahead into next Friday's expiration, we have what I call a left shift. And so it went from 7,500 to 7,400. And, that's the kind of things that it told about. And of course, we had a massive drop off going into that whole July 17th on the net drift, and which kind of foretold how those big boys that are not in the Hamptons, because that's where most of the big boys are right now, vacationing in the summer. And so we should have a pickup in volume that's coming regardless. We basically had this just a shift, a sudden drop looking into Friday. And so that clued us into a potentially Friday being a sell-off. Now, we tend to believe that when the volume is low, that you have to keep your trade small and basically, or stay in cash, okay? Because without volume, there's not a lot of things that'll happen. However, the predictive value of our exposure told a whole bunch of stories that basically warned us about a sell-off that was coming on Friday, and we did sell off. Now, it's not a big sell-off. I mean, I think we dropped from the highs from Monday. I think we hit about 76.12, 13, and we dropped all the way down to 74.98-ish on the ES. Remember, SPX, the other thing that we were talking about, and which I'll go over a little bit, is that SPX and ES generally traded somewhere between 35 to 50 point range over the last last couple of weeks, we've been trading between 65 to 75 point range since the shift from June to September ES contracts. That is normalizing, and I'll go over that with you. But this is to illustrate the fact that we saw all of these negative gamma exposure, especially going down into near the sub 7400. And basically, even though the market was bullish for a good part of sideways chopping with a bullish bias last week from Monday through Wednesday and heading into Thursday, things got a little wonky. This has foretold time and time again over the last of actually the entire year. This has been saying that, and then of course these exposures will change. So we have to pay attention to this on Friday close to look ahead into the next Friday. So this is what we got. Okay. So now we're looking at this Friday, which was the July 17th. And you can clearly see what I mean by range bound, right? We have this, I gotta get rid of these arrows. We have this range bound action, 76.32 top, and then really the bottom area. We've been just chopping along, just pinging up and down into that area. And of course on Friday, this is our hourly chart, and we had a pretty decent sell-off, right? Not too big, but from Monday on, basically we just continue to come down, and this was foretold by our gamma exposure, and so that's what we saw. Now one thing that I want to show you is up here is ES and here is the SPX, and we closed at 74.94.75 on the ES, and then we closed at 74.57.69. That is a differential of 37.06. We are getting back and normalizing. That's about historical differences, about 40 to 50 points on the difference between SPX and ES. Previous few weeks ago, we basically had a situation where this change back into the near 40, and so I believe the mechanics are back to normalizing. The volume is increasing, and so I wanted to talk about that. And so when we see SPX and ES nearing this 40, the 50 range differential, because there is a little bit of a price difference between SPX and ES, that tells me that we're getting back to normal and the trading volume is normal, and we can start trusting not just the gamma exposure, but our pivot analysis and our technical analysis, and actually the time frame in which all these price moves will happen. So that's good news for us, right? Now, what we want to look at next is the fact that, let me get rid of these damn arrows, okay? What the bombshell that everyone needs to think about is that Trump has declassified documents from FBI, CIA, NSA, and the whole slew of Homeland Security and everything else that basically conclusively apparently shows that 2020 election cycle that China meddled, and that false ballots were coordinated with the election officials. And so this is serious stuff, and so the gloves are off and people can clearly see what's been happening. And for those of you scratching your heads, thinking about, for example, I live in Arizona, and how can we elect a Republican president, but we have our Democrat mayors and governors and senators? How is that even possible? And we know some wonky stuff went on in Arizona with the voting machines and things like that. And so it's eye-popping, okay? And of course, you can see clearly who are in on it. And when you look at the mainstream media, CBS, NBC, CNN, all of those people chose not to air Donald Trump's presidential speech. Okay, and so anyways, that this is going to create a further division amongst the left and the right and among the people, but this is what the deep state wants you to do. This is, again, a distraction that's coming, right? Of course, CBS then presents this post on X saying that, oh, they're fact-checking right now. Well, my question to CBS, okay, and we know that this is fake news, okay, and I belong into that camp. I don't think we have legitimate journalism, and I don't care whether Republicans or the Democrats are in power and everything, but it's just, you got to see what your eyes see, okay, and they think you're stupid, okay? My question is, how can you fact check something that hasn't been released yet? Okay, because he said he was going to release this, but they're fact checking and saying it's false. Okay, and the fact that they were not even airing his speech, okay, special report live speech that he gave about this very important thing, because don't you want fair elections? Don't you want legitimate elections? Okay, it seems like the left and the Democrats and mainstream media, okay, this is the deep state. This is the deep state cabal. Okay, they're refusing to report news because they want you to believe them. And by the way, does anybody even watch regular news anymore? I mean, I've lost faith in them like 15, 20 years ago after the great financial crisis. They are not a biased platform. They are more of a propaganda machine, folks. Having said that, let's move on to the next slide. And here's what we're looking at. Well, last week, fear and greed was a neutral at a 49, and this week, but what happens? Okay, this week, fear and greed is at 37. Now, fear is returning back to the market just on a flip of the switch. Okay, this market, even though I'm cautiously bullish, I understand that there are macroeconomic situations here that basically is bearish. Okay, we know the come to Jesus moment is coming. It's just that we're chopping sideways and we're letting the data guide us. And you know that I've been cautiously bullish as we navigated the past 4 to 5 months. Okay, and those of you that's been shorting this market blindly have really gotten your butts handed to you. Okay, it's a tough market. Both bulls and bears are having a tough time because when a market trades sideways, that's what happens unless you can scalp really, really well. Even then, it's a precarious proposition. All right, so we're looking at next week's. So you can see right here that we're looking at the July 24th as we closed on July 17th. And here's the spot price on SPX closing near 74.50. Okay. So from that spot price, we see that SPX has MVC, most valuable contract, right near that 7,300. And so if you want to convert this to ES now, we can subtract 40 more points from there. We're looking at maybe 7,260 on the ES. Now, is that going to come true? Well, this is what the data says, and so that places me, just as last week we pointed out that there was the shift down on the MVC, and it basically hit it almost on the nose. Okay, when we look at the interval map, it's the same story. 7,300 is the MVC. Now this may change. When the market opens on Monday, this will disappear, but it has an uncanny way of coming back to these levels. Save this chart, save this slide, and you'll see what I'm talking about. So that's what I think the target is. I think the bearish trend will continue, but it doesn't mean that we're not chopping in sideways motion. Okay. However, if the 7,300 is MVC, that's what we're looking at. I believe that that's what will happen. So let's look at the macro analysis for 720 through 724. What are we looking at? So right off the bat, I want to start with the ES. And yes, we had, this is the daily chart right here. This is the daily. And we had a pretty decent size sell-off on Friday. Okay, now if you can call it that. I mean, I think we're just trading, chopping in a range right now. This is the range. This is what we've been doing, right? Chopping. Right now, finding some intermediate support here and intermediate support here. But if those break, then we're going to test down this level and still be within range. This is what I'm talking about a market being sideways. Here's the thing, though. Over the last few weeks, I mean, we really had just atrocious volumes, right? And now we're picking up on that volume, which is what I anticipate for the week. And that's exactly what we need. A trader's best friend is volume and directionality. So we have one of two things, right? We don't really have direction. We're just chopping sideways. But you know what? Sideways markets build energy to go up or down. Okay, so that's what we have right now. So let's look at very carefully about what's happening with the US dollar. We have a downward trend on the US dollar, we did tick up. We have moved up on the 10-year yield, and this is hourly chart, and you can clearly see that we've been moving up, but now we have a little bit of a downward trend. But because when 10-year yield goes higher and trends higher, that is bearish for the markets, okay, at this point. Now, gold and silver, all right, you got to get them when nobody wants them, okay? And everybody's convinced that it's going to go lower. The premiums reflect that not only on the spot market, but also on the derivatives market. And that's gold, and here's silver. Here's the thing about gold and silver. If we are to believe that a new monetary system is coming that is backed by cryptocurrencies and stable coins, and that has to be backed by something tangible, it's going to be backed by gold and silver, okay? And so what they want to do is they want to scare you out of Bitcoins, they want to scare you out of XRP, they want to scare you out of gold and silver, okay? Because they don't want you holding those. They want you to buy worthless fractional reserve banking system currency that is about to be replaced. They want you to be the bag holder, okay? Don't be a bag holder, folks. In the meantime, we had the bottom in the oil, and rising oil is bearish because of all the tensions in Iran. But rising oil is signaling that the market is under pressure right now because of the inflationary pressures. Even though we had CPI and PPI data, if you can believe it, that states that the inflation is coming down. We'll see about that. Okay, I think the main goal of Trump administration is to hyperinflate all assets and debt and then put it onto the Fed's balance sheet and then flip the switch to a new monetary system. Okay, that's about as simplistic as I can explain it because I just simply do not have enough time to explain that. Now, VIX, I said we've been range bound into this area. Now we popped over. We have popped over in the past. I just think we're going to have just like a week or so of a bearish bias, and then we're just going to come right back in. Okay, so we got to follow our gamma exposure for Friday. I'm not saying that Monday we may not bounce. I'm not saying that on Tuesday we may not have a bullish looking market. But by come Friday, we're going to be hitting that MVC on the SPX of 7,300 or 7,260 on the ES. Okay, so that's a lot of range. And so, you know what? It's now that the volume is returning, and I continue to anticipate that the volume will return. That's what we're going to be looking at. So that's our kind of the macro state. Let's look at the other stuff. Before we go forward, we are beginning the meat of the earnings this coming week, extending for the next 2 more weeks. And so things are about to get real, as you can see from the earnings release on Netflix, as you saw on the earnings reactions in general. Any of the market participants that have been toppy have not done well. And then you spread in the fact that Lucid had a gigantic fall, and then it just kind of recovered after they paused the market and halted the market. Folks, I'm not going to talk about Lucid that much more, but Lucid is a zero. No one's going to buy those Oldsmobile-looking piece of craps. Okay? So that's all I have to say about that. All right, so... And the ones that I want to pay attention to specifically for this week comes on the heels of a Wednesday market, right? We got the Tesla, and we're going to talk about that. Alphabet, we got ServiceNow. Okay, forget about IBM. IBM, already I think pre-announced their earnings or whatever the case is. We are not going to look at IBM because they fell so much. The meat is gone. Okay, so we're looking at these 3 aspects right now, and then of course the other one that you may want to look at is Intel, but it's just not enough range for us to even be interested. So these 3 are the ones that we're very, very interested in for this coming week, and we'll talk more about that as we move forward. Okay, so as we go forward, we are climbing the Wallarori and charts of interest. We're going to start with the McClellan Summation Index. Let me bring this bad boy up here and then open this up. Guess what, guys? McClellan Summation Index has been saying that it's been bullish over the last 3 or 4 weeks. We're getting a little bit of a blip. And so I think this is going to be short-lived, little retest down into the bottom end of the range, maybe blip below there to suck in the bears and then start moving higher. We are at extremes on the RSI, so that is definitely a contrarian indicator. We have a death hook forming on the MACD. So I think this week, maybe Monday we're gonna get another stick save, which may be true, or we may get a continuation of the sell-off or the starting of the sell-off on Friday. But you cannot ignore our gamma exposure analysis, which states that by July 24th, we're going below 7,300 on the ES or 7,300 on the SPX. Okay, so that's where we are. And the McClellan Summation Index is saying, hey, wait a minute, take a look here. Just a little bit of a blip. Is it enough to bring the markets down and to test down to the bottom end of the range? Okay, so let's look at the SPY for the weekly. What are we doing? We're just trading sideways, are we not? Here's the thing, though. Basically, we have a negative divergences forming on the RSI, okay? And if we do fall, we're going to fall right down into this 20 SMA. 712 to 700 is a potential goal over the next couple of weeks. I think we need to get below this 80 MA, which is the green line right here. Okay, that's a signal line. If we get below there, then things will get real. But I anticipate a major battle right in this area. Just remember that gamma exposure for Friday, 724, is 7,300. Doesn't have to happen on Monday through Thursday. It can all happen at once, just like you saw on Friday. Thursday and Friday, actually. Okay. We have the MACD that's negative. I'm about to form a death hook. MACD histogram is down. CCI is already signaling that we're going to be moving down. Stochastic is at extreme ranges, and we have a downward signal forming. Okay. So divergences are real. And then, of course, we've got our nice little PPO ADX forming this negative formation. And so I think, this week I'm going to be cautiously bearish for the week. Okay, but we'll take the trades as they come. If things change, we'll change. Okay, but this is the first week. I'm basically flipping to cautiously bearish. We'll see what happens on Monday. Okay. The daily chart on SPY tells you a different story. We're below the 50 SMA. All of the lesser 80 MA5 SMAs are all pointing down. We have negative divergences forming. We have increasing in volume from hitting right into that average line, even though it was a low volume week for the most part. I think we just continue to increase in our volume. We have a death hook forming, already formed, actually, not forming, on the MACD. And, obviously we have CCI now dropping off, stochastics dropping off, PPO ADX forming this type of a crush formation, which is bearish. And then, of course, we have this right here, this little blip. Okay, there's been accumulation. We broke that trend line. I believe sell-off is coming, and our gamma exposure is telling us the same thing. And then, of course, before you get all excited about being bearish, I think this is a short-term lived moment. I think Trump is going to pump this market to 8,000. All we're doing is forming this bull flag, right? We're going to move higher. We may come back down to this upper trend line and then move higher. Okay, and I think that's what's going to happen before you get all excited. Okay, I'm cautiously bearish for this week. And our screening, if you're part of our community membership, we just don't have a lot of bullish stocks right now based on our screening process. Silver. Well, silver is silver. Everyone looks at this and saying, oh, we're below this line level. Basically it's going to move lower. And it very well maybe. It could very well move lower. I can't get this arrow to show up. And then can we get down to this 100 level? I don't think so. I think we hit this bottom band, a Bollinger Band, and we will start moving higher. Okay. Now, when we look at the MACD formation, we're just flattening out, aren't we? And we're getting some positive divergences forming on these indicators. So let's move on to gold. Gold is the same thing, right? Let me get rid of these arrows. And gold is, again, slightly below our support level. Everything is pointing down, bearish as hell. Hasn't hit the bottom end of that Bollinger Band. And, really, realistically, there is nothing saving gold right now. Everything is pointed down. It is at these levels you must accumulate when nobody wants them. Gold isn't going anywhere. We have positive divergences on the MACD histogram, on the CCI. We've basically stochastic is now in the very, very oversold category. And then, of course, PPO-ADX, we're just waiting for it to form this bullish flip. Okay, we're almost there, but we're not there. And so this is the time. Premiums are cheap. Spot premiums are cheap. If you're buying physicals, you got to buy it when nobody wants them. Okay, now let's look at service now. Okay, been pretty bullish, and I'm long-term bullish on this, but we got to call it for what it is. Okay, so basically we had a little downtrend. We still have a little bit of a upward bias. However, we are forming because we've been moving higher. Divergence is forming right into that area. Okay, so what we have is we failed right off of this support level area. We're coming right back down, and I think we're going to come right into this box. This is the target, especially with a earnings report on ServiceNow. If it's they'll probably beat, but it's all about guidance, and everybody's cautious right now. And if that guidance sucks, as you saw what happened with Netflix last week, and we talked about that last week, is that we're going to come in to at least this 85 to 90 level. Okay, and this is that box that we're talking about, that we got to get over this upward trend line that's formed in the bottom, so that can act as a support at the top end of this box, which intersects with this upward trend line. What do we got in terms of these MACD? Okay, MACD is pointing down, and it's basically signaling to us that it basically, we're not ready yet, but the MACD histogram is signaling that a potential bearish move is coming, and so that's what we have right now for now, and that's one of our top. It's been one of our top bearish picks over the last couple of weeks. Netflix, I think there's going to be a continuation. I think we're going to chop up, and it's going to try to take out this downward trend line. But after that, I think we're moving lower. There's more meat on this bone. Netflix is losing subscribers left and right because they're programming nobody really wants to watch, and those people that support those type of programming don't have the money to subscribe to them. You do the math. Okay, you got to cater to your audiences. Okay, and then next one is Google reporting earnings again next week. Negative divergences on the RSI. We're sitting right on the 20 SMA and the bottom end of this channel. If that breaks, we're coming right down into that bottom band of the Bollinger Band. If their guidance or something happens to a point where Google's losing money, we're going to come all the way down to this area really, really quick. Okay, so that's what we have on Google. And then, of course, I've been talking about snow, and watch this downward sloping near the top. We got some negative divergences forming. We got the volume depletion. We got the MACD histogram starting to signal that this momentum is waning. Okay, so that's very important. CCI is negatively divergent. We have stochastics near the top. It's about to roll over here. PPO-ADX is forming this. It's still bullish, but it's near the tail end of that. And if we start getting something like this, or we start to form that and then do one of these, okay, it looks like we're doing one of these type of action. And it's early, but you got to be early. You got to be positioned before the move happens, folks, to make money in the stock market. And then Tesla, Tesla. Okay, Tesla, very simple. Okay, I'm long-term bullish, short-term bearish on this. Head and shoulders right here, left shoulder head and right shoulder, negative RSI divergence, probably a slam dunk right here into earnings. Okay, so that's what we're looking at. If you look at these lines, it may come all the way down into this 20 SMA, potentially 200 SMA, sorry, and then down into the support at 300. That may be the range, but pay attention. There's going to be a lot of battles to be fought right in here. They report earnings on Wednesday. Okay, so pretty much that's what I have for the stocks in focus, and we are climbing the wall of worry. Charts of interest we talked about. Okay, get XRP, folks. I'm not even going to show the chart. Okay, get it. They don't want you in it. Get it because they don't want you in it, and get it because everybody's scared. Get it because you're not so sure. Okay, because you don't want to be these people waiting in line at $1,000. Okay, all right. Volume is normalizing. Markets climbing the wall of worry. Markets are range bound. Notice I have this in red. It means that I'm cautiously bearish again for the coming Thursday and Friday towards the end of the week. Monday, we may see again another stick save in the marketplace. Okay. And if that's the case, then you either play it to the upside and then position for the downside. Trump's 2020 and beyond election declassification is larger than you think. This is going to continue to divide the nation, divide everybody. But it needs to be what it needs to be. You can't have a nation when the votes are rigged by outside party. China is clearly involved based on the information presented, and he has declassified. Go read for yourself. For those of you that can read. Okay, don't trust the mainstream media. Don't trust anybody but yourself. Okay, except for God and Jesus, right? Trading volume to pick up next week. So what are we doing? We're going to have choppy market, manipulated markets. We're still in the summer doldrums. This is not going to end until August, okay? Trade the markets that is given to you, not the one you want. The one I want is for Trump to hurry up and send it up to 8,000 and for October to come so we could short this market. I'm still long-term, intermediate-term bullish, but this week I'm going to obey our gamma exposure, which has 7,300, 7,260 for SPES. Volume normalization as we head into next 2 weeks. A major earnings announcement. We talked about those, silver and gold. Watch carefully. Bottoming formation. Get it when nobody wants it. I mean, these are the last chances for cryptos, right, folks? Okay, if it goes lower, buy on any pullbacks. Okay, don't fight the bull. But this week, because we're looking for exhaustion gaps and climax run, but this week, there's no blow off tops. Okay, we are bearish for this week, Thursday and Friday. Doesn't mean Monday through Wednesday I'm going to be bullish. Okay, watching for bottom formation. However, Google, Tesla. Okay, Snow, ServiceNow, Google, Tesla now is reporting earnings. Microsoft, partly because one of the FBI agent that was running, quote unquote, in her words, shadow government, is working at Microsoft. And I think there's some other nefarious things going on at Microsoft. So that's something that we may want to take a position on for the longer term on the short side. Twilio, whatever, one of our favorite trading stocks of the last 10 years, is back on the map here. Carvana. Look, Carvana is a AI play that's masquerading as an AI play, but it's a used car salesman type of a stock. Okay, and used car market's not doing well. Netflix, obviously, they had they had a crappy forward guidance, but the thing is that subscribers are declining. Okay, nobody wants to watch their woke shit. Okay, and United Healthcare. Okay, expect continued pullbacks, but these are buying opportunities for the longer term people. United Healthcare, watch carefully. Okay, if we don't find support right around 410, we're going to fall right into that 390, 398, and that's a buying opportunity. And then Costco, it just, I'm still bearish, and we've featured this last week, but that's it's going to continue to come down, partly because they can't follow the Chipotle model of raising prices, in this case their membership premiums, to offset declining membership subscription. All right, so that's it for now. Thank you for following me at Galaxy.Markets. Follow us and like us, share us, and above all, comment on YouTube. Subscribe there. And if you want to work with me, you have to basically email me at coachbrandon@protonmail.com. If you're interested in joining my community, Essentials, $49. It's in the link in the description and profile. Otherwise, be very careful out there. Still low volume, but the volume is picking up. Okay, I'm short-term bearish, slightly bearish, especially Thursday and Friday. We may have a rally Monday through Wednesday. Stick save, okay? But I am continuously bullish in the intermediate term. Just this week, we got to follow the gamma. All right, so that's it for now. Be careful out there. Bye-bye.